very happy, we are very excited to talk with you today. And we believe that for a person like you who has such a great amount of wisdom and learning, we would be able to
You're
imbibe
putting
some
too
of
much
that.
pressure.
No, I'm sure you will live up to it and probably exceed that also. So basically, it's a kind of a semi-informal session, and how we'll proceed is that we have collected a few questions from the students. Abhijit was instrumental in doing that, and we'll have those questions one by one, and you can then respond to those questions. The questions are broadly in the category of the students as such. How do they kind of prepare themselves for a career in financial services industry? What are the things, characteristic skills that they need to develop? Then we'll talk a little bit about the industry, the Indian industry, the financial services industry, and different kind of externalities which are influencing it, and how do we see it proceeding from there. And then we'll talk about some of these larger macro and hot button issues towards the end, hopefully, if we have time left. So, ma'am, the first question which I wanted to ask you, which I wanted to pose to you, was not really from the student's perspective, but more from the perspective of the program. So, this particular program, PGP Finance, is one of its kind of program at any of the IIMs, and this is the first batch that we are processing that is going through the system right now. So, if there's any kind of wish list that you have from a program like this, which you would like to share with us, what do you think, from your perspective, would be the key areas that we should focus on so that we are able to create a system which will hold these students in good stead, and we will be able to create leaders of the Indian financial services industry tomorrow or in the days to come?
So that's an interesting question because, while finance is one industry, there are several components of it, and you need, obviously, depending upon the business, you need some very different skills. But if we look at basically, there's corporate banking, there's markets, there's mid-market, corporate banking, and then there's retail. So those are the four big buckets in the financial services space. And of course, you have insurance and asset management as well. So, so there's a very wide range of businesses. But if I look at the component skills required for all of them, the core, of course, in finance is risk management. So understanding risk, where does it come from? How do you try and quantify risk, and how do you manage risk, is a core component which is required in any of these segments that we talked about, whether it's consumer finance, whether it's mid-market corporate banking, whether it's investment banking, insurance, or asset management. So understanding that, and understanding that there are different elements of it, some are measurable, some are not measurable, and some you can manage for, and some you just have to react to when it happens. And the world is throwing up a lot of the incidents where you can't really predict and you have to react on the go. That's one big skill that's required. Then, of course, I think this has been belabored a whole lot, but let me say it nevertheless. Technology. Technology has become such a big part of almost any industry. And today with the pandemic, really, we are finding that things that we thought were not conducive to technology are all adopting technology very, very rapidly. So in finance in particular, given the scale, without technology, you can't achieve much. So understanding technology, and within technology, understanding process design, because process design from a perspective of robustness and good UI is an important element. One of the components of technology which hasn't been focused on that much in the formal, education system, or even in corporates as a skill, has been this whole issue of user experience and UI design. I think that's becoming very, very critical in the new world, as more and more of the solutions are being driven and delivered digitally. The difference between the winners and the also rans is fundamentally very often how they manage risk and how they manage user experience. So I think that's the second skill element that's required, technology with a focus on UI. Analytics, finance has always been about maths and continues to be about maths, especially when it comes to large numbers. I think analytical skills are important. Two other skills that I think are critical, which again haven't had as much focus sharply, is one about consumer behavior. Understanding consumer behavior and interpreting consumer behavior. And second is teamworking, because as the world becomes more complex and finance becomes more complex, uh, again, I think it's really critical to be able to collaborate and work in a collaborative fashion to produce results. So I would say broadly, those are the big top items that I would think about as you think about the components required from a horizontal skills perspective.
Uh, you're right, ma'am. I mean, finance always has been a very interdisciplinary kind of
Yeah,
area of work. And even traditionally, as far as academia is concerned, it included a lot of inputs from programming, from mathematics, from pure sciences also, and of course, like
yeah.
the nuts and bolts of accounting, etc. And now we have one more component which we should kind of address, which is technology.
Yeah.
And
And
you would
this
have.
whole agile way of working, which I'm sure you've heard about, I would certainly recommend that some exposure to that during the formal learning is a good idea, because a lot of financial service entities are adopting agile working as a way to work during formative periods, but also, you know, in some cases while they're running the organization.
I think that's also something which has happened in your career as well. I mean, you
Yes.
have kind of worked in insurance, for example, in the securities business, and I believe now you're part of the Google Payments Advisory Board as well. So these are a very diverse set of
Yeah.
skills. So we'll kind of
No, but what I mean by agile working is, this whole methodology which is being used by a lot of organizations today on when they're delivering a new business or setting up a new business, they set up teams which are like work groups, which are cross-functional groups, and they come together to deliver an outcome. And they will recoup back whenever any modification or growth is required. And in some cases, they will actually meet frequently to
hmm,
see what is required to be done in from a horizontal platform perspective. So while somebody may be in risk, somebody may be in compliance, somebody may be in operations, somebody may be in sales, somebody may be in marketing, uh, there will actually be an agile group which is formed with people from all of these places who will come together and really work together to execute delivery.
that's
So it's a formal method which a lot of organizations are using, and I would think it's a good thing to bring that in as part of the course if possible.
great. So, ma'am, if we just expand the audience a little bit, the scope of the audience, as of now, the people who are live right now are students of IMKPGPF program, but this program would be posted on YouTube as well. And there would be students who are kind of part of different programs, which perhaps may not be as well endowed or as well structured. For those students, what are the key areas which they should focus on, which would be independent of the system if they are very passionate about working in the financial services industry?
So as I said, in the financial services industry, the skills which are inherently required are either you're deeply analytical, in which case you might get into a markets investing role, you might get into a risk management role, you might get into an actuarial role if you're in insurance. Um, or you could be a great relationship person, you have great interpersonal skills, in which case you could aim to be a relationship manager, either on the corporate side, investment banking side, or consumer side. Wealth management is a fast growing segment, so there are relationship managers required there as well. If you're tech oriented, of course, we talked about tech. Tech pervades every element of finance. So you could, be a tech specialist and help to build out a lot of the platforms which underlie solutions for delivering finance. Um, People skills, very critical again. So given that finance still employs a large number of people, just the whole issue around talent management, leadership development, is another skill which is required in financial services institutions. Um, Consumer marketing, consumer insights, being able to develop products and solutions for consumers. That's critical again. So you could actually have any of those skills and bring a unique perspective into the role. But I think, as a manager, when I would hire somebody, what is a non skill but aptitude related thing I would look for in people? You look for learning agility, you look for adaptability, and you look for the ability to work across in a team. Because I think those are important aptitudes which will again differentiate between the ones who succeed in the long haul and the ones who maybe don't do as well in the long term.
So, ma'am, if you look back to your MBA days, and at that time, I'm sure you would have several options available to you in terms of different industries. You could have gone into consulting, for example, or into marketing. Can you kind of just share with us the reasons why you chose to go get into financial services? And what do you think were the skills and qualities that were there in you which helped you to progress so well in the industry?
So, there's a lot of right place, right time in life. And I have to admit that I've been lucky in a lot of the breaks that I got. And that is a big part of success. But having said that, um, my dad was in the army. So we used to change schools every 2 to 3 years. And therefore, necessarily, you had a lot of adaptability and flexibility because you couldn't really develop roots. You actually learned something and then you moved on and you had to develop a whole new set of relationships and equations and move on. So I think that adaptability was something that probably was ingrained in the way I was brought up. I was good at maths, so I wanted to do something around maths. My desire actually was to be a physics researcher. And then, for whatever historical reasons, I ended up not doing physics but doing economics and getting into finance. So, this whole attitude of research and quantitative analytics is something that I enjoyed. Um, Given that finance and consulting seemed like the two lines to get into, I was more interested in finance. I was not good at interviewing, so actually I got placed very much at the end of the placement season at IIM, and I think I was very lucky to have got ICICI because I could have joined a more mature institution, probably learned less. Whereas having joined ICICI, which was small at that point of time and diversified in a whole lot of areas, um, I was able to demonstrate commitment and actually show my work to my managers. And I was given a lot of opportunities as the organization expanded and diversified. I think the only thing that I did differently from some of my colleagues was, again, I go back to this issue of adaptability. That every time something new was being done, I did not hesitate. I was actually willing to take on that challenge and try something new. So when I say I got into a joint venture with JP Morgan on investment banking, I was given that opportunity. When we got a line of credit from World Bank to fund the tech sector, they asked me whether I wanted to do it, and I agreed to do it. And many times it meant that I gave up a team of 10, 15 people and moved back to zero and started with nobody and no balance sheet and no nothing and built it out again. And that happened again and again, whether it was, as I said, the tech funding line, or it was a joint venture investment banking, or it was starting consumer credit for ICICI, or starting life insurance. So I was willing to take those chances and willing to say, okay, the institution is betting on me by giving me a chance to try something new. I should just take it up. And through that, I learned. And, when you start from scratch, it's actually a huge opportunity to learn. When you join a large organization, you get bucketed into specific areas. But when you're in a very small group, you you have to basically do everything from the nuts and bolts to the big design. So learning becomes very hard. And the fact that I was willing to take all those opportunities helped me as I went along.
it's fascinating to listen about your experiences, because a lot of our students kind of view the placements as the be all and end all
I
of
know.
almost of their
You should
existence.
tell them I got placed pretty much, I think, on the second last day or something. And
And look where you are right now, and I'm sure. So,
so no, I'm happy with the way my career shaped up. As I said, I've been lucky with a lot of breaks, and it's been
so
good.
So one part is being at the right place at the right time and having some of those inherent qualities or the required qualities inherent in you. But it's also a matter of projecting those qualities to the people who are the decision makers who will basically help you grow in the organization. So
Yeah.
how did you do that, and what were the qualities? Part of it was kind of like alluded to in your previous answer, but I will still like to specifically kind of want to discuss that. What were the qualities which the ICICI top management saw in you that they entrusted you with so many new ventures as you progressed in your career? And also, is there something which is inherent in you in terms of your risk appetite? Um, because a lot of the people want to grow linearly. If they kind of get to a comfortable position, they have a team of 10 people, let's say they want to get maybe 15 people more and work on the same thing. But you chose to take on and kind of reconstruct, build the thing again and again. So, these two aspects, if you can kind of reflect on that.
Yeah, which is why, I went back and I talked about the army background of saying that that's the way I grew up, right? That I was in one school for 2 years, 3 years. I built credibility with the teachers. And how do you build credibility? You build credibility by doing your work sincerely, and then your work speaks for itself. Typically, when if you stay in one place for a long time, that credibility keeps building upon itself. But because I would move every 2 to 3 years, I would have built credibility, gone to a particular level. Then I go back, I go off to a new school, and I have to start from zero again and start to build that credibility again. And you can't get frustrated and say, "Oh my God, why do I have to prove myself?" No, you have to, because you're in a new place and nobody knows you. So you get used to doing that, and I think that worked for me in the workplace as well. That I never questioned why I have to prove myself again and again. I would, yeah, the days when you get frustrated and you say why, but on most days I would say, yeah, it's okay. I have to, my work has to speak for itself. And so my work should be good at all points of time. I should stay committed, do my best. So that was one attitude which I think helped me a lot. And this willingness to say that, look, I'm happy to start from zero again, because as long as I am learning something, what is growth? I think for a lot of people, growth was the size of the balance sheet they were managing, growth was the size of the team that they were managing. For me, in my mindset, growth was, am I learning something every day? And am I doing something which is making a difference to the organization every day? Because if I'm learning, then I'm investing in my own capital. If I'm contributing, then I'm building equity in the system. So those are the two questions I would ask myself frequently. That, did I learn? Did I contribute? Did I learn? Did I contribute? And I think that gave me the ability to make the changes, learn. I was not a great team player at one point. I was very focused on doing my own work, but I wasn't there wasn't a negativity even if there wasn't a positivity. But as I grew senior in the system and started to manage teams, uh, I think again, because I had to relearn so many times, uh, I was happy to learn collectively. So a lot of the businesses that we ended up building, it was a team which came together, learned together, and executed together. And I think that became a very fundamental leadership style, which stood me in great stead, because I didn't have to have all the answers. I was able to harness the intellect and the work of the team members to produce great outcomes.
That, I'm reminded of the incident which you narrated at the commencement speech about the report cards.
Yes,
So it almost like a theme of micro
integrity.
ethics. Yeah,
Absolutely.
So
I
if you can
think,
share that episode with our students, yeah, if it's fine with you, ma'am.
yeah, no, no, I shared it on a public platform, so there is no hesitation in sharing it again. So, now let me just give some color to it. I think the financial, it's important in every place, but in the financial world, it's even more important because trust is so much of a bedrock of everything. And, you will make mistakes, things will go wrong. And I was lucky in having joined ICSI where you were allowed to make mistakes if they were honest mistakes. Nobody killed you for making a mistake. But, but I think fundamentally all that is allowed as long as people trust your intent and they believe that you have come from the right intent, you have tried to do the right things. So understanding the difference between right and wrong is important because that is what builds credibility in the long term and that's what builds your brand. And that's the story that I said that, today people talk about it, but sometimes in today's world, there is so much of a chase for money and success that people think it's okay to take shortcuts. And I think it doesn't stand you in the long term. You might win in the short term, but you lose out in the long term if you take shortcuts. So the story that I talked about was when I was in school. I think it was in the fifth standard or something. I was a very competitive child. My father was very ambitious that I should always come first in class, and that was really important to him. And uh, there was our classroom and the staff quarters were about 10 minutes walk apart from each other. And the class teacher basically put all the report cards in sequence and put a piece of paper on top of the report cards, put a rubber band and said, go leave it in the staff room. And I knew that if I shifted the paper, I would know who's come first in class. And it was such a temptation all the while to try and see who's come first in class. But I know that I would have thought about it and said, no, that's not the right thing to do. If she wanted me to see it, she would not have put the paper there. And so I resisted the temptation, and it's something that I remembered. And it became the bedrock of saying it may be a very small thing, but however small, always do what's right. Don't take the shortcuts. I did come first, by the way, in that class. So maybe the being good paid off, but I think ethics is the bedrock. And when in doubt, if you're in doubt, go and check what's the right thing to do. And that's what builds credibility and trust and allows people to take chances with you and allows you to make honest mistakes and move on from there. So in the three things that I had talked about at IIM were three choices, which to me were, when actually for the IIM talk, I had spent some time thinking about if I had to advise people on what has worked for me in my career, then what are the things that have really worked for me? And I talked about three choices and one habit. The three choices were first, choose the right path. So when you're presented with a fork in terms of doing the right thing and taking a shortcut, don't take the shortcut because even it looks like a very tiny thing, but if you say it's okay to do it, then the next time you have a choice, again you say, oh, it's okay, I can do it again. And it just builds, and then you will start doing bigger things which are wrong and you'll get into big trouble. So it's just better to always stay with the right, even if it means you're giving up something at that point of time. So that was one choice that I talked about. The other I talked about was the issue of staying in a defined path versus choosing a learning opportunity and saying that, for instance, we talked about when ICICI was getting into consumer finance, I used to be one of the three three or four people who were running the balance sheet at that point of time. So going into consumer finance meant that I gave up all this power, right, of running one third, one fourth of the balance sheet of ICICI, and then saying, okay, I start from zero because there's no asset base at all. And similarly, from having a large team, I suddenly have no team. But when offered, a couple of us were offered the opportunity, and I took it, and some other people didn't. And I took it because I thought I would learn. And somebody was taking a bet on me and saying, okay, you can go and do this and learn. And I took that. And that path of taking the learning path rather than the status path helped me to build skills along the way. So I think that was the second choice I talked about. The third was about partnerships, whether you're choosing partnerships in your personal life or choosing partnerships in the corporate world. I think picking your partners carefully is important because that's what helps you to grow and achieve the outcomes you want to. Um, in life, of course, I was lucky I found my partner at IIM and the world, but at the workplace as well, when we looked at joint venture partners, we had a joint venture partner, investment banking, we had one in life insurance, and both were great partners. I mean, they were very successful companies globally, but one worked better than the other because their values and goals were aligned to what we were trying to do. So I think picking that carefully is important because that can get you results in the long term as well. And then, of course, this whole issue of adaptability and agility is a bedrock attitude, which I think is critical in today's world. But there's so much change. The pace of change only increases every passing year. So we used to all talk about return to normality in a market scenario, but the world is not like that. There's no return to normality. It just the pace of change just keeps getting exponential.
It again, I mean, it's very interesting to hear this because like ethics in finance is something which is so critical and it's so often abused, and people kind of take it so much for granted. So like I started my career in retail banking, and the amount of mis-selling which I saw way back in the early 2000s was kind of it
Yeah,
just 3 months, and I decided that this is it. I don't want to work in this environment more. Although scientifically, if you look at something like for example, the marshmallow experiments,
yeah,
where they say that the children who are able to resist temptation are the ones who tend to do much better
yeah,
in future. And it's like wrongdoings is also something, or taking the shortcut is kind of like a temptation. And those
yeah.
who are able to resist it perhaps are able to succeed better in life. Ma'am, that kind of takes me to the next question, which is related to the issue of placements. So there are a lot of students who would be approached by fintech companies. We anticipate that in a couple of years' time, there would be a great demand from these companies which are growing. At the same time, they have this option of going to the traditional financial services company. And at this
I
moment, the
would choose
debate.
the fintech.
So my question was that there's this debate that fintech is going to be either a disruptor or kind of they will break the old mold companies, or they're going to be co-opted by the dominant players, which is the traditional financial services industry. So one is kind of you go to fintech and take the experience. Either ways, you kind of win-win. But from the perspective of which industry or which part of the industry would kind of survive, what's your view on that?
So that's a very tough one. And if we look at what's really happening is, um, fintech, what are the pluses of a fintech? The pluses are that they're more agile. They are much more native with use of technology and analytics. So they get that all the time, whether it's UI or it's analytics or it's process, all of that gets embedded. Just the way they think about some of those things is so different from our traditional industry. And I can see that even more sharply because even though at Axis, I thought we were trying to do a lot of transformation to make ourselves a digital leader. And we had built a lot of capability around it. But when I look at the way a Google Pay thinks compared to how even an Axis Bank and its digitally savvy avatar used to think, there are differences. So that it's basically native tech versus native finance is the way the two are. Right? So that's the strength that tech brings. But fundamentally, the problem with a lot of the fintech startups in India, for instance, has been while they're very good on innovation and very good on technology, the two things they miss out on is understanding that fundamentally finance is about risk. And you have to be able to manage that risk well. And the second thing is the cost of customer acquisition. So a lot of the fintechs actually get killed on the cost of customer acquisition because they just burn up too much money in trying to acquire customers, and then their whole business model goes for a toss because they're not looking at cash contributions, even in the medium term, forget about in the short term. So given that there are some fintechs which will work, if they've got that scale economics right and they figured out how to acquire customers in a sensible fashion, or they have the advantage of already having a consumer platform which they can build on. And I think on the finance side, a lot of the financial institutions are adapting to technology and saying, okay, we have to build our own capability, or we have to partner with fintechs to get the solution to the customer. So I think the market will become a little more concentrated, but both will exist. I would expect to see a lot more partnerships between the traditional finance guys and the new age fintech. And of course, the big techs do have the advantage of both tech and scale. They just have to get some core finance skills in which, again, I think a lot of them are looking at partnering with traditional finance institutions to get that skill in. So net, what am I saying? I'm saying I think tech firms will win. I think financial institutions who learn to adapt and partner will win. And if you don't, then I think the writing's on the wall.
Ma'am, if you look at it a little bit more granularly in terms of the sectors which fintech is in right now, for example, in payments, in wealth advisory or fund management, or in terms of like some amount of funding and deal making activities, where do you think the most action is going to come from in terms of the amount of activity fintech would be able to generate and the amount of disruption they would be able to cause?
So, where there is a high volume of relatively well-defined transactions, tech has a huge advantage. And that's why we've seen tech come in and play big time in the payment space or even in the Forex space. Globally, you see them being pretty big in the Forex space as well. So I think those are very natural to the tech space. Then there is products which require a lot of advice and face-to-face interaction, which tends to be much more insurance, for instance, or even wealth management on the high ticket size. I think that tends to require advice. Um, I think it's very interesting to see how that pans out, but it will get invaded by fintech because you're seeing a lot of passive funds which are more analytically designed, and those will become amenable to tech. We are seeing some of that happen in the US. We've seen that happen in China. So I think fund management will come in. Lending will come in slowly. I think we're seeing experiments around lending. The whole issue is around getting the risk management experience sorted. Um, I would guess that the balance sheets will still be of the traditional players, but a lot of the tech companies will probably become gateways to some of those solutions.
So, ma'am, what is your view in regards to the cryptocurrency situation in India? So, for example, there have been a lot of policy kind of stances which are very aggressively against cryptocurrency. But then there was some developments from the Supreme Court side, and now apparently there is some rethink about the whole situation. So, in case the administration or the regulatory bodies decide to kind of manage cryptocurrency rather than completely bar them, how do you think, or what do you think would be the key areas that they should focus on if they decide to manage or regulate cryptocurrency and allow it to function in a place like India?
So I think from a regulator's perspective, the problem with cryptocurrency is when it funds the dark web, right? That's one thing that you would worry about. If it's doing terrorism funding or it's doing dark web funding, that's the huge negative of cryptocurrency. The positive, of course, is traceability. I think traceability is a big advantage with cryptocurrency, and fungibility. That you can move it across the world. Now, from a regulatory perspective, that I think philosophically everybody agrees that terror funding and dark web funding through cryptocurrency is a bad thing, and therefore any cryptocurrency which is allowed should be able to have the AML controls that you would want to have in traditional currency. So I think that there cannot be any policy misalignment. But where there will be policy misalignment between what regulators want and what consumers want is this whole fungibility of cryptocurrency. That I can move the currency seamlessly across the world, whereas regulators won't want that because then it means that any form of exchange control goes out of the window. Um, so I think that would be another hesitation with cryptocurrency, which you have to be able to either say the world has opened up, and I don't think that's going to happen because, especially the post-Trump era, there is more protectionism than globalism right now. We'll see where that will finally lands. But certainly, I think AML controls are something that any cryptocurrency design will have to have, and and some linkage to real value. Because the other problem that's happened with cryptocurrencies, I mean, ultimately, currency is you have to have trust in currency. And if the value of the currency is going to fluctuate dramatically, as we saw happen with Bitcoin and some of the others, that's not good from a currency perspective as well. So I think those are two controls that there has to be universal alignment on that we have to have in place. And then this whole issue of cross country movement is something that I guess will get debated.
So that kind of takes me to the importance of financial literacy in the country also, because one of the part is, as you mentioned, protecting the consumer who might get into cryptocurrency for speculative purpose, for example. So how do you, because it's such a task in a country like India, improving the financial literacy, and that's something which you have been also in some way or form involved with.
Yeah.
What do you think is the status right now in India in terms of policy focus, and where do you want it to be? Where do you wish or think that it should be so that we do see some change in the ground? Uh,
So I think on financial inclusion, the issue is really one is the cost of delivery, but technology can help us resolve that cost of delivery question by giving, you know, digital solutions, whether it is on payments, whether it's on lending, whether it's on savings or investments. Um, the challenge really is, again, this whole KYC issue. Uh, the KYC issue makes it very expensive to actually deliver services to the last mile. And, we have to loosen up a little bit on KYC and AML for small value transactions and come back and say that, opening an account has to be easier if it's a small value account. And that's where I think regulation needs to loosen up. Because technology can put controls in terms of high frequency indicators, etc. And if we can resolve for some of the problems that we are trying to resolve on AML by this physical control on who opens an account and how much they can move, if that can be done through an analytical platform, then actually you can deliver financial inclusion better. Because you don't have to make the opening of accounts so cumbersome and expensive.
You just mentioned Donald Trump, and there has been this view that the world has seen three distinct phases in the recent past. The first one was the end of the world wars and the period of Cold Wars, where people chose to be at the side of the socialists or communists and at the side of the capitalists. Then you had this second phase where we saw a lot of global cooperation. And then some people are saying that 2016 is the end of that second phase, the end of globalization as such. And now we are seeing in 2020 that Trump has been potentially or hopefully defeated. So, do you see that period of 2016-20 as a blip in the longer term trend of global cooperation, global trade? Or do you think that 2016 event is actually indicative of more fundamental shifts and we are going to live in a more isolated, protectionist economies for the next 25, 30 years, maybe?
So I don't know whether I'm best placed to answer that question, but nevertheless, I will give you my perspective on it. Um, I think that what's happening is if we look at politics and how leaders win, they are winning for taking care of their constituencies, right? And globalization has meant that a lot of local communities have felt that they have got cheated out of prosperity because the world opened up too quickly. The pandemic also actually right now that could be a more short-termish feeling, but the feeling that opening up the world means that I get exposed to all of this disease which comes from nowhere as well is also creating a much more closed attitude. So between the need to keep opportunities for your own constituency and to protect your own people, I think there will be some element of localization or protectionism, whatever you call it, come into play. So you already hear that from a lot of leaders saying go local, buy local, and all that. And people are saying travel local. People are saying let me go live closer to family because if I can do remote working, I can do it from everywhere. So I think there is going to be, for some time at least, a big trend towards that. But but ultimately, we also realize that it's a equalizer because the pandemic has affected every country, every race, everybody in the same way. So to that extent, there is an emotional connection that is hurting everybody. So I think in the long term we'll be okay. But if you ask me 5, 10 years, I think the trend is going to be more localization.
It's fascinating that the two dominant trends, technology tends to kind of remove the
It is
boundaries,
horizontal. Yeah. Yeah.
people in politics
The
are trying to
politics
build
will, yeah.
walls.
Yeah.
Let's see how it kind of plays out. But ma'am, just related to that particular question is the issue of payment space in India. There has been a lot of dominant Indian players which have created a niche for themselves. Um, and the demonetization kind of expedited that process. And in
And
recent
COVID
past,
has done
yes,
almost as much actually.
absolutely,
If
absolutely.
we look at the pace of digitization, I think Demon took it like that, and then now COVID has taken it like that again.
Yep, yep, absolutely. And we have, because of these phenomena and because of the potential of the market, also we are seeing players like WhatsApp coming in, Google Pay, whom you're advising, they are also in India in a big way. So how do we ensure that our domestic entities are able to retain their domination and perhaps even go beyond our boundaries and become successful companies which are able to compete with these big names?
Yeah, so that's where we just talked about this localization, globalization issue a little while ago. I think we have to look at, maybe I'm coming here with a bias because I'm advising Google, right? But but not really. When we were in Access, we chose to partner with Google because what we felt was that UPI was a platform and we had the capability to do UPI, but to give low cost access to consumers, you needed to work with platforms where customers were visiting naturally. So there was a case for partnering together to find the right solution for the customer. I think ultimately on things like this, where convenience, safety, trust is so important, reliability is so important, the consumer is going to pick the platform they want to go with. And UPI is very much Indian. And one way to think about it is that if we make UPI a success, then we can take UPI as a global platform. And people like Google and WhatsApp and PhonePe have the ability to take it global. Whereas the Indian players, who are the Indian players now left in the payment space, frankly, very few. They might find it more difficult to take it global. So as long as it's solving this issue and allowing us to partner with existing institutions to solve Indian problems, I don't see why we should get very fussed about who are the owners.
Hmm.
Because even if we look at what we call Indian institutions, there's a lot of foreign investment into those companies, right? So it's very hard to say. And if we look at the Googles and the WhatsApp apps, the employees who are building the products, a lot of them are Indians. So what is Indian? What's not Indian? How do you define? Um, how do you define that as a complex thing?
Yeah, I mean, not just employees, but people who are heading these organizations are.
Exactly, exactly. I mean, if you look at the top tech firms today, they're being run by Indians. Something for us to be proud of.
Yeah.
And if we start to put controls and they start to put controls and say, no, Indians should not be running those companies, is that good for anybody? I mean, it's on the one hand, we want to say, give more visas, use more talent. So I think that's an artificial restriction in my mind. As long as we are doing the right thing for the consumer, um, and there's fairness in how it's being played, I think it's fair. NPCI, of course, has turned around now and said they don't want anybody to have more than 30% market share, which means they're not going to have a monopoly anyway. And that will give some space for new players to come.
Makes sense. Makes sense, ma'am. So another of the major effect of this whole COVID situation is
I'm sorry,
further.
we are going to have to wind up in the next 5 minutes because I
Sure,
have.
ma'am. So we can have
Yeah,
this as the last question.
sure.
So, and it's actually quite kind of appropriate also because this is the biggest problem that India is facing right now. So this whole issue of the banking crisis, the NPA problem, the COVID situation has further aggravated, it
Yeah.
seems, that this problem is going to be further complicated by these phenomena, by this event. What do you think is going to happen in this space in the next 2 to 5 years? Some people are saying that there is going to be consolidation, the private players are going to stay, become dominant, the public players are going to get acquired, or they would stop being so relevant as they were maybe around 15, 20 years back. What's your take on this now?
So actually, that's a trend we've seen happening for the last decade. And forget about COVID. Even before that, we were seeing that there was a gradual but steady shift in market share from state-owned to private sector, whether it's insurance, whether it's mutual funds, or whether it's banks. Now, in mutual funds, it happened very quickly because there was one state-owned player and a lot of private sector players. In insurance, again, it has happened fairly quickly because there have been one life insurer, a couple of non-life insurers, and many more private insurers. In banking, there have been a large number of public sector units and a large number of private sector. So the shift has taken more time, but it's been a steady shift of, and it's fundamentally because of the ownership and governance structure of those institutions that we're not actually allowing them to compete on the core things that you need to compete on. You need to compete on talent. They can't hire in the open market. Um, you need to be able to access capital cheaply, which they're not able to do. There are restrictions on how they can raise the capital. So we have to unshackle the sector for it to be able to compete. But of course, they have going in advantages. They've got the advantage of brand and trust and distribution and existing customer base. So the way I would look at it, and I think lots of people have talked about it, that I think fundamentally there will end up being 6, 8 banks in the country. We won't have many more than that. And some of the consolidation of banks has already reduced the number of state-owned banks through consolidation. We probably have 3, 4 large state-owned players and 3, 4 private sector players. And who wins will depend upon whether we are able to unshackle some of the state-owned sector to be able to compete on talent and compete on capital effectively.
So, Ms. Shikha, thank you so much for your time. We truly appreciate your insights. And we hope, as Professor Rudra mentioned in the opening remarks, that you visit our campus in person and we are able to organize this at a much larger scale. Thank you so much once
Would love
again.
to, and wish you and all the students the very best. Make the most of your time at the institute. Um, Very formative period and a great chance to build networks. So, wish you all the very best. Thank
Thank
you.
you so much. Thank you.